2-year interest rates just hit 5%. So why are banks and credit unions giving you 2.3% or less for a 24-month CD rate? Hey guys, Ben with Income Options Trading here. Today I'm going to go over how we can get more than a 2.3% rate holding up our money for 2 years compared to the bank. Now I went to a local credit union. Credit unions usually have a higher rate than banks. I've seen banks a lot lower than this, but this credit union here gives 2.3% on a 24-month certificate. 2-year rates are 5% right now. You can get almost exactly 5% by using a brokerage account instead of a bank. So this is a chart of the 2-year rates. You can see right here, the 7.5, that means 0.75 was the interest rate back at the beginning of 2022. Now you look way up here, today around 50, which is 5%. So if I go to a bank like I showed you before, you're only going to get 2%. Some places might only give you 1% or even less. So I'm using the tastytrade brokerage account. Robinhood, you probably can't do this. You need a cash settled index. That's European style. That means it's cash settled. It doesn't settle to stock or futures. And also it can't be early exercised. So SPX, that's the perfect indice. The S&P 500, the actual index that you can actually trade stock, but you can trade options. I have the S&P 500 index option chain above me. It's SPX is the ticker. I'm going to go out around 2 years, June 20th. That's close. I'm going to do what's called a box spread. I have a whole video on that going into details, so I'm not going to go into it too much, but here's what we're going to do. We're going to buy a call spread, and we're going to buy a put spread. And we're going to overlap those strikes, and we're going to go right around at the money. To make it easy, let's go 100 points wide. So I'm going to buy the 4,500 put here. I'm going to sell the 4,400 put. Then on the opposite side, I'm going to buy the 4,400 call. I'm going to sell the 4,500 call. Down here you see you're just under $91. But at expiration, the spread's going to be worth $100. So you're going to buy this for about $91. You're going to be able to sell it for $100 later. That's $900 in profit, guys, using only $9,000. That's a 10% return over 2 years, and it's guaranteed. That matches up with that 5% rate for a 2-year annual. We're gonna go to the curve mode. You can see this is the graph. The green is where you make profit, full profit. And that's everywhere, guys. All the way down, all the way down. So it doesn't matter what happens. In 2 years, you will make $900 on $9,000 down. And the great thing is you can get out of this whenever you want. The caveat is it depends on what the interest rates are doing. So if interest rates go up after you put this on, this value is going to go down. So you're going to lose money in the short term. So if you want to take it off, you're going to lose money. But if you hold on to it for the whole duration of the trade, you're going to keep that money. So this is a box spread, and this is how you can make more than 2.3% at your bank or your credit union. And the great thing is, instead of a CD, you can get out of this whenever you want. So if you wait a year, this might be $95. Guess what? You can take that $500 and you can run with it, or $400, whatever it is. You don't have to lock it in for the full 2 years. If you like this video, if you want to learn more about the box spread, you can watch this video right here.